Could the Charlotte housing market take a big U-turn downwards due to the surge in mortgage rates we saw over the past 4 weeks? Our local housing market has really heated up over the past couple of months. In February alone, we sold 11 of our listings. But will our market continue to heat up? So today we'll take a look at our local Charlotte housing market, identify where we are currently, what's the data saying, and we'll also review some forward indicators to help us identify where we may be going in the future. Hi guys, my name is Josh Finigan with the Finigan Group here at eXp Realty, and I'm here to give you the latest and the greatest, the most up-to-date news on our local housing market. So if you want to make sure you stay up to date on our local housing market, you don't miss any of our market updates, and you know exactly what's going on in our backyard, there's going to be a link in the description below where you can sign up for our weekly newsletter so you know exactly what's going on as we see the fluctuations and changes in this market. So let's go ahead and take a look at our local Charlotte housing market, take a look at what happened most recently here in February, see where we are currently, and you want to make sure you do stay tuned till the end so you can identify what leading indicators, what leading factors you need to keep your eye on as we move forward into March, April, and May. In February, we saw 1,017 new listings hit the market, which was a 6% increase from the amount of new listings we saw at the market in January, but it was a 21% decrease from the amount of new listings we saw in February of 2022. So we are seeing a healthy increase in the amount of new listings we're seeing hit the market month over month, but a lot of that can be contributed to seasonal trends. As we move into the spring months, more people will choose to put their homes on the market. But if we take a look at year-over-year trends, we are seeing much fewer people make that decision to put their homes on the market this year than they have in prior years. In February, we saw 1,217 homes actually accept an offer and go under contract, which was a 12% increase from the amount of pending homes we saw in January, but it was a 5% decrease from the amount of homes we saw accept an offer in February of 2022. So we definitely saw a big bump in the amount of pending sales we saw month over month, and it's really been a trend we've seen over the past couple months. And one thing we do always like to pay attention to, because it is a leading indicator, is the amount of new listings compared to pending sales. And this is the third month in a row we saw the number of pending sales outpace the number of new listings. This means we've seen the inventory shrink over the past couple months, giving buyers fewer options to choose from and giving sellers more negotiating power. In February, we saw 816 homes actually close, which was a 22% increase from the amount of homes we saw close in January, but it was a 30% decrease from the amount of closed homes we saw in February of 2022. In February, the average sales price here in Charlotte was $470,000, which was a 3% increase from the average sales price in January, and it was a 5% increase from the average sales price we saw in February of 2022. This is definitely great news for you homeowners out there. The average sales price month over month increased, but why? And the answer is sold data is what we call a lagging indicator, which means it paints a picture of what really happened previously in the market, whether it is a month or a couple of months ago, when that home actually accepted an offer. And one thing that we've seen over the past couple months is the rates have been dropping really from middle of December into January. In January, the rates actually dipped into the 5% for a split second, but they dipped into the 5% range. And again, buyers don't buy for price point, they buy for payment. For every 1% fluctuation in the mortgage rate, a buyer's purchasing power is affected by 10%. So effectively, in December and January, buyers had a lot more purchasing power than they previously had. And we saw this affect the market in real time. And for those of you who watched our previous market update video, we saw the average sales price drop pretty substantially in January. The reason is most people who closed in January accepted an offer right about middle to end of December, which was at one of the highest points we saw the mortgage rates last year. So this sold data is reflective of those buyers who had more purchasing power in December and January. So we should be able to see the sold data in March and possibly April continue to be strong, because those buyers that were purchasing homes had more purchasing power. Now, can we expect to see this party to continue? And the answer is probably not. In February, we saw the rates start to rise and rise pretty rapidly again. Rates really went from 6% in the beginning of February to 6.65% towards the end of February, which means throughout the month of February, home buyers out there lost about 6.5% of their purchasing power. And we're still seeing those rates surge in March as well, which means we could see the buyers' purchasing demand decrease over the next couple months, which will negatively affect our housing market and negatively affect the sold data a couple months from now. And the 10-year Treasury, which directly affects the mortgage rate, just hit above 4%. So if we continue to see those rates surge, we could really see the housing market suffer, really on both fronts. Buyers' purchasing power will diminish, and also there's going to be less demand out there, which will affect the seller's bottom line. So one of the leading indicators you really want to make sure you keep your eye on is the 10-year Treasury yield and also the mortgage rates, because as those increase, buyers' affordability will decrease, which will affect our market in real time. The next leading indicator you really want to make sure you keep your eye on still has to do with rates, and it's the Federal Reserve. They're meeting again in March 21st and March 22nd. Now, the market is predicting them to only increase rates by 1/4 basis point. However, due to unfavorable inflation data recently coming out, many are starting to predict we may see a 50 basis point increase from the Fed meeting rather than a 25 basis point increase. Another leading indicator we've been tracking really closely is the United States year-over-year home price appreciation data. And the most recent housing data released from Redfin shows that at the end of February, the United States home price appreciation was at 0%. So we've seen the year-over-year home price appreciation in the United States continuously get closer and closer to zero and close to inverting. And we should see the next release of data in March release the first negative year-over-year appreciation in the United States since the Great Recession, the Great Housing Crisis. And this will create a lot of fear, uncertainty, and doubt in the housing market. A lot of the media companies and news companies will have salacious headlines saying home prices are falling, the sky is falling.
The sky is falling! The sky is falling!
This, that, and the other. It's going to create a lot of nervousness and fear in home buyers out there. And we could continuously see that year-over-year number getting farther and farther in the negative as we move closer to the peak in euphoria of last year, which was right about May, June. Especially with mortgage rates really putting a lot of pressure on buyers' purchasing power. So we're not out of the woodworks yet. We could definitely see a little bit more turbulence in this market moving forward. And we're keeping close eyes on what's going on with the Federal Reserve and what's going on with inflation, so we can keep you guys up to date every step of the way. We've had a lot of our clients reach out to us recently and say, Josh, is now a good time to buy? And the answer is it really depends on what you're looking to accomplish and your personal goals. Homebuyer purchasing power and homebuyer affordability has decreased exponentially recently, especially due to the recent surge in mortgage rates. However, this will diminish the amount of buyers out there currently looking for homes, which means home buyers will have a little bit more negotiating power than they have in the past when they do find that home that they want to purchase. If you home sellers out there thinking, is now a good time for me to make a move, we could possibly see a little bit more turbulence here in the next couple of months moving forward. So we could possibly see the average sales price start to tick down again. It's something you want to keep your eye on if you are considering doing updates, renovations in order to sell your home, or you're trying to identify when you're actually looking to hit the market. Because one thing that we're seeing affect the real estate market a little bit more than the seasonal trends is the inflation data and the mortgage rates and the Federal Reserve and the overall economy. So if you guys are considering buying, selling, or investing in real estate and you just want to identify, hey, is now a good time for me? We'd love to sit down with you, identify your goals, and see if now may be a good time or if it may be better for you to wait a little bit. So feel free to give us a call, text us, email us. I'd love to be your real estate resource of choice to help guide you through the process. And guys, if you want to stay up to date on everything going on in our local housing market, everything coming to the Charlotte area, you want to make sure you click that subscribe button and turn notifications on. Also, click the link in the description below to sign up for our weekly newsletter so you can stay up to date every step of the way. Guys, thanks for watching. I'll catch you in the next video.